These 3 must-know ChatGPT 4.0 use cases for finance will blow your mind, and it will change the way you look at financial markets, financial analysis, AI, and more. People can't stop talking about ChatGPT.
ChatGPT 4.0?
ChatGPT 4.0.
ChatGPT 4.0.
And AI stocks are having the time of their lives. Learning to use these tools responsibly will not only be valuable, but necessary for your future. We're going to use ChatGPT 4.0 and RStudio for the use cases we're going to talk about today. There are links down below that will guide you to install RStudio in case you don't have it in your computer yet. Let's start with the first use case, portfolio optimization. Assuming you have a specific portfolio you would like to have for retirement or medium-term profits, you can use ChatGPT in order to help you find an allocation of your preferred stocks and investments so you can get the highest return for every point of risk. Beware, the modern portfolio theory is praised by a lot of academics, while famous investors like Warren Buffett say they are total nonsense. I'm not here to make a judgment of who's right and who's wrong, but we're going to use this model and you get to decide if you think it is worth it or not. With that said, we're going to give ChatGPT the following prompt. I would like you to provide me with an R script that will pull the stock prices of Apple, Nvidia, and Berkshire Hathaway stock for the period between January 1st, 2023 and January 1st, 2024. I would like you to create an efficient frontier according to the modern portfolio theory with all combinations of these 3 stocks and create a visualization for this step. Efficient frontier is a fancy word for the best stock allocation in terms of return for every given risk available. After that, I want you to create a function that will require me to put the average return I am looking for, and the output should be the stock allocations that I should put in order to get the efficient portfolio with that specific return. Also, create a visualization with the same efficient frontier, but showcasing in red the point where my given portfolio exists in the graph. And you can see this is the response that we get with the code that we have to put in RStudio. That is written right here in use case number 1. First, we're going to install the packages that we have here. I already have them installed, so I'm just going to load them. Then we have the symbols and the start and end date. We're going to download the stock prices and we're going to adjust the stock prices here, calculate the daily returns, the mean and covariance matrix, and we are going to simulate 5,000 portfolios for our efficient frontier. Then we have set the risk-free rate. Our risk-free rate right now is about 5%. So we are going to put 5% as the risk-free rate and load it. We are going to create a loop that will create random portfolios with this information. We'll create a data set for plotting, and then we are going to have our efficient frontier. Here you can see all the portfolios you can create with these stocks where you have the maximum return for every given risk that you can provide. Now we are going to create a function to calculate the optimal weights. We're going to create a function in order to make a plot of it. And now the target return. Let's say I want a 10% return. So here we have a 10%, or you can replace it with your desired return. So it will give me the allocations of every stock that I am acquiring, make a plot in order to understand where it is. As you can see, we have our efficient frontier as before, but if you want a 10% return, then you have this risk and this return on the graph. As you can see, it is pretty close to the combination where you have the less amount of risk. So as you can see here, these are the weights for our stocks. We changed the Berkshire Hathaway stock because it wasn't working with the data. So we put Co, which is the Coca-Cola company. So we should invest 25% in Apple, 19% in Nvidia, and 72% in Coca-Cola in order to get this return for this amount of risk. The second use case is sentiment analysis in financial reports. The US Financial Supervisor, also known as the SEC, requires businesses listed in stock markets to publish their financial quarterly reports. You can leverage ChatGPT in order to run a sentiment analysis on this report. Therefore, before you read it, you know the overall sentiment of the business and its future. And why do this? Because you can read it more critically when you know the sentiment that was written into the report, because some reports might hype you up, but in reality they show a different picture with the data. This use case is not trying to save time on actually reading the report, but only providing more context before you read it, and also signaling you with any biases or inconsistent data that you might find in order to read it more critically. The first thing you should do is download the report you want to run the sentiment analysis on. In this case, we're going to use the 10Q form of Berkshire Hathaway for the first quarter of 2024. So we're gonna write the following script. We're gonna upload the Berkshire Hathaway PDF document, and you can write. Here you can find the thank you form of Berkshire Hathaway for the first quarter of 2024. I'm about to start reading it, but I want you to run a sentiment analysis on this report, so I may avoid any biased analysis. After running the sentiment analysis, I want you to point me the overall sentiment of the present business and future projections. Then list me 3 possible biases that I should avoid when reading it. And lastly, give me a message on any warning or beware section in the report that may have inconsistent or illogical data. And we have this following answer. The overall sentiment is positive. Here we can see the figures of the net earnings of the report compared to last year. We can also see the balance sheet and the cash equivalents that they have and how the insurance segment is doing. We can also see the future projections on long-term growth and the discussion of the stable outlook of railroad, utilities, and the energy segment. Here we have the possible biases to avoid. Recency bias. And here you can see that given a significant drop in net earnings compared to the same quarter last year, it is essential to consider the broader context. Do not fall into recency bias. Confirmation bias. Be aware of any preconceived notions about Berkshire Hathaway performance so you can critically assess the report without confirming your existing beliefs. And lastly, anchoring bias. Avoid placing too much weight on high earnings reported in previous quarters. Market conditions and investment performance change because of external factors. And lastly, we have the warnings or inconsistent data. You have a warning on the investment gains and losses, the foreign currency effects, and the insurance and reinsurance contracts. So you got a pretty detailed sentiment analysis on the report, so now you can read it knowing that the sentiment is positive, but you should be careful of any information that looks pretty good or bad compared to previous data with these biases in mind. The last use case, which is my favorite, is given your current portfolio. Let's say you want to add a new asset to the portfolio. What stock allocation should you have in order to increase the risk-return ratio of your portfolio? So we go to ChatGPT 4 and we have the following prompt. I want you to provide me with an R script that does the following. It collects stock price data of Apple, Nvidia, Amazon, and Berkshire Hathaway from January 1st, 2023 to January 1st, 2024. No use of external APIs. It calculates the average return of each stock as well as the standard deviation. My portfolio has a composition as follows: 50% Apple, 15% Nvidia, and 35% Berkshire Hathaway. With that said, calculate the average return of the portfolio, the standard deviation of the portfolio, and the Sortino ratio. Now, let's say I want to add a new asset, in this case Amazon. With the information we have so far, and knowing I'm looking for the best Sortino ratio possible, create a function that provides me with the best stock allocation with the addition of Amazon stock if it's needed. If you find a better portfolio without it, then do not add it. And we have the following response with the code we have to run on RStudio. So first we're gonna load the required libraries. In this case, I have them already installed. You should install them in case you do not have it. We have the stocks and the weights of our initial portfolio. You can change these values according to any specific example you have. Then we have to specify the data range. In this case, January 1st, 2023 to January 1st, 2024. We need to get the stock data. After that, we need to put the stock data into a data set, merge it, and calculate the daily returns, calculate the average return and standard deviation for each stock, and also define the portfolio weights. Calculate the Sortino ratio for the portfolio, and we have everything now. Initial portfolio metrics. These are the initial values you gave. And now you have to load a new library, the Optim, in order to optimize the portfolio with the addition of Amazon or any stock you would like to try. And we have this function right here we have to load. After doing that, we have to perform the portfolio optimization. And as you can see, there's a lot of coding going in the background. Calculate new portfolio metrics, and we're going to print the results right here, as well as creating a data set to plot it. After running all this final data, we have the following. This green dot right here is the initial portfolio. We can see the return was pretty low compared to the new one with a low Sortino ratio. And you can see all the values right here that says the optimal weights, the average return, and standard deviation. As you can see with the line, we have a huge increase in the return as well as the Sortino ratio in the optimal portfolio. What are the optimal weights? We have 11% in the first stock, 30% in the second stock, 14% in the third stock, and 43% in Amazon stock. So you can see we have a new portfolio that you can try with the specific values that you have. Now you know 3 cool use cases of ChatGPT 4o for finance. These use cases can improve the way you analyze at things and make better data-driven decisions. Do not forget, before running and copy-pasting all these prompts, you have to understand the underlying financial concepts as well as the data analysis process that you are implementing. Do not copy-paste blindly because AI is used to do hallucinations. Fancy word for wrong answers. Do not think that AI will not give you a false answer. So you have to double check the information is right and consistent with what you expect. And if it turns out to be right, you have a pretty good analysis. If you want a new video on any specific topic like sortino ratio, financial statements, comment down below so we can create a video for you. One of the toughest and weakest points of AI is having to know the information, the underlying concepts beforehand in order to check its veracity. In order to use AI responsibly, we have to know about finance and economics beforehand. If you want to become an expert in finance and economics, click here to find more. That's it for today. I hope you enjoyed this video. See you all in the next one. Ciao, ciao.